So in this video, we're going to cover expected range. And so just right click on the chart, click indicators, click expected range, click new. On new, I have a couple choices here once I add it on. One of those is high to low, one of those is close to close. We'll talk about each of those within this video. The high to low is going to measure the high to low within the period I specify. I can look at a 4-minute time frame. I can look at a 60-minute time frame. I can look at a 1,440 minutes, which is like a day time frame. I can even look at up to a 1-week time frame. So 7 times 24 times 60. If I want to look at what is the expected movement of a week. So I can go small or large. I can adjust this in a lot of ways. Like I'll look at 30 and 90 minutes right before the oil inventory report to use that to look at doing a straddle or strangle on oil inventory because it happens at the same time every week. So there's a lot of ways you can use the indicator. You can also do a start offset. What is this useful for? Well, maybe I want to look at 1 hour out from 2:30 on oil because like the last oil contract expires at 2:30. So maybe I want to look at 1:30 to 2:30. Or maybe I want to look at 3:15 to 4:15. 225, for silver. So there's a lot of different ways, 130 for gold. I can set this up in a lot of different ways. I can make it line up with ags, but I can actually delay the start offset. Like I can delay it by 15 minutes. So let's say if I go in and delay by 15 minutes, then it'll basically show me 60 minutes starting at 12:15 forward. Okay? Most people use it just like this. The other big advantage is I may delay it by 60 minutes because maybe I want to do 2-hour contracts. Maybe I want to do boomerangs on 2 hours out instead of just an hour out. And I do that so that way I can look at the odd hours. So I can look at 1 to 3 and 3 to 5 and 4 to 6. So we added that feature in now where you can use the offset for the plotting of the expected range. Like all the indicators, and I'll go through it a little bit more as I add it back on. And I'll go ahead and set it to our default setting, but feel free to play with it. These settings right here. And if you want to make them line up with a specific, say a spread expiration, a binary expiration, or whatever, or just a closing time of a day. And then, or maybe you want to make it line up with exiting right before a news announcement, or there's just a lot of ways you can play with it. Standard setting is 60 and 0. You can turn on and off the alerts like you can on every other indicator. And you can turn on your voice, turn on your regular, on the minimum range ticks. This is a setting that, let's say you have like a 3-tick bar, it'd fire off the alert every time it moved up and down a tick. So if you had 3-tick range. So if you want to go in, you're probably not going to have that, but if you want to go in and get rid of that where it's just firing off over and over and over again, then you can go in and you can make that like a minimum of a 4-tick range or don't give me an alert. Okay, like if there's not at least a 4-tick expected range, because the thing moves up, think about 4 ticks. If it moves up 3 ticks, it's going to fire off, and if it moves down 2 ticks, you're going to get a fire off on the other side, like if you had it at 75%. So that is optional. I don't use it, but if you're getting too many alarms and you want to raise that threshold up a little bit, that is a way to do it. The threshold is the percent. So what percent? If I have a 10-tick, bar, or a 20-tick bar, we'll make it easy, a 20-tick expected range, then when the market moves 15 ticks, tell me. Okay, and it'll actually plot the line and it'll make the announcement for you. And then what it'll do is it'll say when it gets back down to 50%, then if it hits 75 again, tell me. Because you may be able to get the trade over and over and over again. Okay? And you could make it ticks. It'll do whichever one is, greater. So you could say 50% or 3 ticks or, whatever you want to do. I leave that at 0. I don't recommend touching it, but if you want to play with it, you're welcome to. But if you're having an issue, just go back to the defaults. Okay? Down here, you can actually change the colors. Okay? So you got your alarm color, your expectation color, your high to low, and your actual, the actual here is for your close to close. And so we'll talk about that after we go through a little bit more detail on the expected range. Okay, so I've added the indicator on now. One other aspect of the indicator is it also will plot the channels for you. And that, as I said, that's right up here where it says draw channels. And you can even change the color of the channels if you want to. Okay? So right there, you can make them whatever color you want. One of the new features we've added in on the channels is there's actually now a floating channel. This actually tells you what the next period, or in this case hour, because we chose 60 minutes, what the next hour's channel is going to be. You can see if it's going to get smaller, larger, how big it is. You know, maybe you're entering right at the end of the hour. You want to see what's the expectation for the next hour. Now you can actually see 1 hour in advance right on the chart. So that's one of the new features we've just added in. Okay, so what is the channel? This channel is showing you the expectation of the high to the low from the open right there. Okay, so from the open to the high and from the open to the low, what is the expectation? This is sort of like a deviation level. It doesn't tell you the high to the low. It tells you from the open to the high, the open to the low. Assuming the market just went up, or assuming the market just went down, then did it hit it? Here is a perfect example. So right here, euro dollar, it goes down. It doesn't actually hit the low of the channel, but it did hit the 1-to-1 deviation because it went up a few ticks first, and then it went down. Okay? So we actually get to see that high to low down here. So again, the channel is great for you visually being able to see, is it staying inside of the expected move? It's also great for you to see if it's breaking out. It's great for you to see, it lets you really see, because it's hard to tell on this line, like how big of a change there really is. But, I mean, you can tell, like, right here, look at the expected move, how it got so much larger. Well, that's when news happens on euro dollar right there, especially the interest rate announcements, the press conference. So the move got a lot bigger. And so, but then the move got smaller. Normally, we don't have this big move right here. We had a nice big run. I caught that move this morning. We talked about that first thing in the morning. But then it backed off, and things slowed down and got back to normal. Okay? This is normal. This is what to expect during this hour. So you know when to take profits. You know when to do reversal trades. That's the original boomerang. As we go in, we talk about the pullback. You launch a boomerang. That's the initial move. That's this trade was taken off. Okay? But then you get a reversal. That's a pullback. That's when the boomerang comes back to you. And then sometimes it just takes off afterwards. And so that can be, what we call the extension or the continuation, where it'll just keep going and going and going. So there's 3 phases to boomerang, but you need expectations to have that. You need volume to confirm it. So part of that, we went over volume in the last video. In this video, expectations of high to low. And just like in the deviation indicator, it works the same way. What does red and green mean? This sort of throws people off. Red, it's really simple. It's how far it's moved from the high, which means we're going to buy. Okay? So, I know it sounds funny, but that's it. Okay, it's moved this far down from the high. We've moved the expected move. We're expecting the market to retrace. As long as we get the break of the high and we get the volume and all that fun stuff, we're expecting it to retrace. So, we're getting into a buy signal. Right here, we're getting into a sell signal. Now, this is something we couldn't do in our old expected range indicator because we just saw basically one time during the hour. Now we see that there was a buy and there was a sell trade. We had 2 trades in the same hour that you can take advantage of, because by using the histogram, you get to take advantage of that. The other part that we've added on, again, is the ability to add on, like I said, the alarm level. And again, if the alarm's too faint, depending upon what color you're using or whatever, you can always change that up and hit apply right there. And then you'll see, there's the alarm line. And you can raise that up or down. We usually set it at 75% to say, hey, pay attention. Okay, like get ready for boomerang reversals, get ready for maybe continuation breakouts, things like that. Okay? But just extremely, extremely helpful. And makes it really, really easy. And now with the added thing. Now, if you want to see that expected move over here, if you use the templates, it ought to be built into most of the templates. But again, you can go to properties, and you can go down here, and you can make the right side margin. I have it at 150. You need to make it a little larger, depending upon how much time you need on there. But you can see that expected range, that size, that expected range over there. Okay, or you just drag your chart. It's just eventually you'll have to, move your chart back. So if you do that, then your chart's always visible. And that is, I believe, every major thing to expected range high to low. And to help you on that, let me go in. I'm going to add on this real quick. I want to make sure everybody has this down. Okay. So again, this is measuring like the high to the low in that hour. And if I get real picky, okay, so we go here to high 37.20, low 36.97. So 37.20, 36.97. I click OK. And then what we'll get down here is it'll tell me from high. See how it says in the green right there, from high 23 ticks. And even up here you can see it in the data box. Okay, so like right there, from high 23 ticks. So basically it moved 23 ticks from the high, and then when it moved back up, it'll measure how far did it move, from the low. And I'm not going to get super picky on this one, but just to show you, it's about 24 ticks. If I go over here and look at it, okay, there's 23 again. So 23, and I can actually see in the data box, or if I middle click my mouse button, I can see 23 ticks from the low. Okay? What number do I care about? I care about the bigger number. Okay, so if it's further down, and that's the bigger number is going to be green or the red, whichever number is higher, that's the one I'm going to care about the most. Okay? And if they're at the same and I don't know, well, then just leave it alone and wait for the next trade if you're confused. But it's real simple. I mean, green higher than red, pay attention to green. Red higher than green, pay attention to red. Sell when the red gets up here. Buy when the green gets down here. Make sure you have the volume and the breakout confirmation that we talk about in Boomerang, but that's the general idea, the general consensus of how it works. Now, what about the close to close? This is something we've had for a little bit. A lot of people haven't paid too much attention to. They don't know how it's worked. We haven't talked about it too much. So I'm going to leave expected range high to low on there. Now I'm also going to add on expected range. But this time I'm going to go up here and I'm going to choose close to close. Now one thing we added on, and it should do this automatically, it actually shouldn't fire off any alerts. If it does, turn off your alerts for close to close because you don't need them. Okay? So you can just set this right here to false. It shouldn't fire it off anyway. If it is, let me know, but should be good on that. And hit apply. And now what it's going to do is it's going to plot my close to close. What is close to close? Close to close is simply the setting between the last close and the current close, and what the expected close to close is on that bar. So, yeah, it may move down 23 ticks, but what is it going to move back up? What is it going to end at? What do I have an expectation of? Well, I only had an expectation of 8. We ended at 7, so we ended pretty much right on the expectation. But we had an expectation that the thing would move high to low 22 ticks. Meaning, I thought it'd move down 22 ticks or up 22 ticks, either way. But whatever it did, 22 minus 8, you can do that math real quick. That's what, 14, I guess? So 14. I basically expected it to go up or down 22 ticks and then back 14 before the end of the hour. And that's exactly what it did. Using the close to close expectation. And we have this histogram here, which visually shows you, okay, how far did it go? And that's nice. But you know what? You don't really need it. Okay? Why? Because we've made it where now it plots the channels of the close to close right on the chart. Now you could change the colors if, this is not readable to you. But if you look at it, I mean, close to close is close. It's not like high to low where, your high to low, you need this right here to see it because this is really only going to show you, close to high and close to low. And we want to see high to low. That's why we use the high to low indicator. But close to close really is close to close. Okay, there's no high or lows built in. It's close to close. So you don't really need to plot it. You just need to see it. So if that's the close, this is, it should expire somewhere right around here. And if it does that, then I don't need it. So guess what I can do? I can drag it up here and put it right on top of that indicator. And then I can click on it, and I can change. I can open up my 3 different colored plots. I can change each one of them to transparent. Now, we already had this done for you inside of all the templates, but I'm showing you how we do it. It's great if you want to look at it, all that. But you can see the close to close by just looking at where's the price at in relation to that channel. And now we've saved ourselves a whole panel, which does add up. Okay? Every panel adds up. And I can see, hey, it went down, came back up, close to close. There we go. And I can see where it finished in relation to the market. And that's really all that matters, is what is the expectation. The actual, you can see it. Just look at, you don't need an indicator to see it. You just look at the price in relation to how close is it to the center or to the expected, the low of that. Look at this one right here. Close to close, right there. And what I have found, what's been really helpful for me as well as just trading, is sometimes you get, just like last night, it's really flat, okay? And maybe we don't get that expected range. But a lot of times we will get the expected close. As a range. So look at how many hours we hit the expected close, but maybe we didn't hit the expected range. And these can be really good. Not only the ranges, but even the close to closes can be used for butterflies. Okay? And on 1 hour time frames, 2 hour time frames, 6 hour time frames, 8 hour time frames, 1 day time frames, 1 week time frames. So a lot of butterfly, straddle, strangle possibilities. Iron condors. All those could be used using these indicators. In addition to the boomerang strategies, the apex strategies, knowing when to stop adding to a position, when to tighten your stops, when to look for a reversal, things like that. All these can be added in. But there's a lot of ways to apply them. We teach you a very simple one out of the gate, boomerang, but you can add on to that. And we'll add on. We'll teach you more and more ways and strategies to use this on. But just master that boomerang reversal trade first. When you get that down, then you can master, the launches and the continuations, the phase 1 and 3 trades, and make sure you're in the room so we can help you out with it. But this will open up a whole new world because it gives you correct expectations on open, correct expectations on the close, correct expectations on volume, and then you add on deviation levels for moves during the day for major pivot levels, and you're really starting to analyze and read the markets. And again, the number one use of close to close, in case you didn't get it, was yes, I expect a high to low to move, but I don't expect it to stay at the low or stay at the high. What do I think the retracement may be? Okay, so if I were going to go up and I were going to choose, say, an out of the money or something like that binary, or I was going to just choose Forex or futures or stocks, whatever to trade, how far could I reasonably expect it to go where I should take profit or where I should choose that out of the money contract? What is realistic? If I'm only down 10 ticks and I expect to close at 10 ticks, then I probably don't really expect to make a whole lot. I don't want to choose an out of the money. But if I'm down 20 and my close to close is 10, then I probably want to go ahead and look at the idea of we may have a really good setup for doing a 10 tick retracement. So maybe I'll buy one that's 5 ticks out of the money. And to add on to one last piece for you on close to close, let's say we bust through the expected range, like we did on this news hour right here, okay, during the Draghi ECB Euro news conference. It busts through. I don't really have the expectation when it busts through that it's going to go all the way back up and do it. If it didn't stay within its normal expectation range, I don't expect it to stay in that normal expectation of close to close. But here's what I do, is I look at what is that expected close to close, okay, about 8 ticks, and that is take it, and I move it down here. Go, what do I expect at the end of I expect it to pull back basically 8 ticks. Okay? So I'm looking at about an 8 tick move. Or if you want to get even more detailed, the most accurate way to do it would actually be to measure from the expected range to the close. Okay? So which in this case is 11 ticks. And you can go, okay, after I hit my bottom, I get, retracement. How far up do I think it could actually go? Pretty much 11 ticks. And it went a little bit more than 11. It basically closed at 8, like we talked about. But you could use that pull down, and then how far back of a pullback And that's what you're measuring here. How far back of a pullback should I expect from the extreme high or the extreme low going into the close of the hour? And this would, maybe it comes down, it flattens out, starts going chop, and that's when you're like, you know what? I'm going to sell a butterfly. I'm going to do one right here, and I'm going to do one right here. And you get that thing super tight based on using that close to close in your favor. So it's a lot of ways to apply it. I just want to open up your eyes a little bit and show you how the indicator works. And if you got any questions, let me know.